Hey, good morning, everybody. It's lovely to see you all again after, well, it was in Cyprus. I think we saw quite a lot of you, but after a long break here, so lovely to see you. Anyway, so I'm Tom Higgins. I'm CEO, founder of Goldeye. We are a software development company. We focus on FX, CFDs, and now cryptocurrencies, adding big data as well as a whole new section, because that's where all the new money is in data. Anyway, thank you.
Good morning, everyone. Just a little interruption. Should I just continue?
I think, wait, you can hear.
Okay, there we go. Okay, so my name is Alina Pedersen, and I'm the co-CEO of Your Buzz. We do trade execution technology with the matching engine at the heart of it that allows you to run a central order book. And yeah, good morning.
Morning, thanks.
Ilya Sorokin, CEO of ActTrader Technologies. We provide a multi-asset trading platform, kind of A to Z solution. That's about it.
Albina Zhdanova, as Tom said, I'm very happy to see all of you guys, and thank you for everyone who made it 10 a.m. for the first panel. That is devotion, and I'm very happy to see people that want to learn and know what's happening. So I'm representing Tools for Brokers. We do software for the financial markets, brokers, hedge funds. We connecting them with the liquidity providers, plus helping with the reporting, risk management, and many other automation tools.
Good morning, everyone. My name's Jon Light. I'm VP of Trading Solutions at DevExperts. We're a fintech company that build trading platforms for multi-asset brokers, covering FX, CFDs, crypto, equities, futures, options. Our platforms range from SaaS all the way to enterprise, and we have custom development solutions that we can put on top.
Good morning, everyone. I'm Richard Bartlett, Head of Sales from FX Cubic. We are a next-gen provider of bridging and aggregation tools, primarily for MetaTrader brokers, with a special focus on profit-making tools and risk management to empower our clients to make the most of this modern market.
Thanks, everyone, for introduction. We have a lot of CFD technology expertise here, so let's dive right in. Technology has unequivocally driven innovation in the financial services, with fintech firms disrupting traditional investment businesses. So let's touch upon, the two, I think, given the number of people in the panel, let's talk, each one of you, one or two biggest innovations, technology innovations in the space that happened in 2020, 2021. Who wants to start? Tom, do you want to go first?
Yeah, there's been so much that's happened this year. It's been our busiest year that we've ever had, actually. And I think the things that people that I've seen change this year is an awful lot of questioning as to, have I got the right platforms? Have I got the right technology? Because they've not just been sitting there doing nothing. Because if you can't do what you used to do, you think about different things because they've been operating in a different way. So I think people have been looking at switching platforms. They've been looking at their businesses and redesigning how their businesses work and thinking, where do I want to be in the future? They've been properly thinking forward, which they've not really done before. So when you look at that, so one of our core businesses is liquidity management, and people have been thinking much more about the type of liquidity providers that they use, to getting a match between their liquidity providers and their clients, because it isn't just you turn on liquidity and it works. You have to have the right liquidity for the right type of clients. So we've seen a big change in there, where people are choosing a mixture of liquidity providers to match the sort of clients that they have and the sort of clients that they want to go to. So big changes there. I think we'll see more in that area as well.
Great. Alina, do you want to
Yes,
talk about the top two?
Yeah, I think liquidity is indeed a very important subject. What we've seen, however, is the emergence of the crypto as a product, and spot crypto, and today even crypto derivatives such as futures on crypto, fractional shares, NDFs, so all of that being offered in the market by the retail brokers. Now, while the the end platform for the traders becomes more and more simplistic, the back end is becoming more and more complex to have to offer the risk management, the reporting, and different flexibility within the execution rules for those new products. The emergence of new breed of LPs, such as crypto LPs, who are able to cater to the need of retail brokers, and of course now us, at least at Yorbos, having to run 24/7 with zero downtime for maintenance. Now, all of that driven by crypto is, well, an exciting time.
Interesting. Crypto is the biggest innovation, huh?
I think so, yeah.
Ilya?
Yeah, I
what do you
think
see?
that blockchain and cryptocurrency is definitely a major technological advancement that we're addressing. Now we see emergence of artificial intelligence that's being incorporated, some of the applications, which is kind of interesting technology that's coming on really fast. And I think on the business side, we see a younger population coming into the market, and so they have a totally different way of looking at financial markets and different way of trading. So we have to kind of rethink how we present the financial data to the newer generation, and how do we attract them? How do we make technology simpler, because they're like simpler solutions. So those are the probably main things that.
The simplified front end.
Yeah, right. So.
Great. Albina?
I would say that traders outperforming brokers in terms of innovation and the tools they're using. And we are all part of big ecosystems, so we are driven by the traders because they do main activities, both single traders and the funds as well, or managers, asset managers. So they building all the systems to perform very high quality trading. And brokers are a bit behind to catch up with the demands of these traders. And I think the main thing that brokers need to focus now is to focus on the quality rather than the quantity or on the small things. The quality is something that is driving the most successful brokers that we see been growing. And we see the switch to this performance, more protect the clients, more the risk management tools, and more reporting and automation to actually provide the quality. So I see the switch not regarding the assets. Assets are different, of course, but more to focus on bringing the high quality product to the clients and always to achieve that.
Jon?
One area that I think has seen a massive growth over the past 2 years is the large number of beginner retail traders that haven't had any experience in capital markets. And with that, a lot of brokers are demanding things like built-in education, tool tips, built-in videos. We even have one broker that's built a pure process flow, taking a retail client through the charts, all the way through order tickets and kind of showing that process. And with that, a lot of brokers also want to have a simplified platform where, certainly with crypto, people just want to log in, buy and sell. So a lot of our brokers have split the platform into a professional looking view and a simplified view. So I think that's quite an interesting area. The other piece that I think has changed a lot over the past 2 years is as more and more brokers have become multi-asset, integrations have become the new space race. It's really important to be able to integrate quickly, especially with things like crypto. If you might be a broker that's set up the top 10 cryptocurrencies that you expect your clients to trade, but it just takes Elon Musk to tweet overnight, and the next morning your clients are demanding an alt currency that you didn't have before. And depending on how you're set up, you might need to go and integrate to a new custodian, wallet provider, liquidity provider. And if you don't do that quickly, then they're going to go somewhere else to trade that crypto.
Yeah, I think the key innovation for us is bearing in mind brokers are offering a broader range of asset classes, is to build better risk intelligence surrounding all the different asset classes. So we've been focusing really on building more tools to help brokers understand where their positions are with all different asset classes, and also from a broader perspective across multiple platforms, because more and more brokers now are with MT4, MT5, and perhaps proprietary platform CTrader. We're looking to build a centralized risk intelligence engine, really, where they can actually monitor all of their platforms globally at once. So this is really the biggest innovation we see that's imperative for brokers, to empower them with the right data and give them real-time information for them to make the best decisions to to maximize the profits and manage the risk as effectively as they can. So that's the biggest innovation we've brought. And our latest product is RXI, and this is what is basically delivering this.
I think just add something on John said is on education. There's a sort of bit of a dichotomy at the moment because you've got an awful lot of very false information coming on social media from influencers. I mean, my daughter, who is an actress, she said, "Do you think I should be investing in cryptocurrencies?" And I think, God, no, because she hasn't got a clue about anything financial. So you've got a whole bunch of people saying, "Do this, buy this. I'm going to make you very, very rich if you do this." And then you've got the proper side of the education, and it's a real balance between those two to make sure that you can have education that really tells people what's going on, rather than just the hype type stuff that I do worry about, because there is nothing behind the Instagram type hype messages you get.
Yeah, I first realized there was a real change in the type of trader signing up when I was at a family barbecue, and all of my older family are asking me what platforms to use, how should I buy crypto, and yeah, it's definitely something that I would not have expected kind of 2-3 years ago.
Wow, so there's a lot of recurrent themes, right? I mean, everyone is into trading with crypto, and millennials and the new generation tapping into that. And just listening to all of you, the themes are reoccurring, right? And so the brokers are, need to adapt to this ever-changing environment, fast environment, introducing new asset classes, being 24/7, all of those challenges. We haven't spoken much about data, but data has become the business for so many, not only brokerages, but generally financial institutions. How do brokers utilize the data? Are they effectively utilizing it? Are there better ways to do that? Who wants to?
I think it comes down to what their technology provider can offer. I think there's always been a huge amount of data the brokers have had access to, but I think from a technology provider stance, if we go back a few years, it's been mainly about technology providers offering connectivity solutions. But now, as technology progresses, with forward-thinking sort of tech providers, we offer the tools to actually take that data and present it in a meaningful way, so the brokers can actually then take effective decisions from it. So I think a lot of it, unless some of the bigger brokers perhaps can develop some of these things themselves, but I think for the majority of the market, this is where technology providers come in to offer those solutions. I think
business intelligence solutions.
Exactly. I think, yeah.
I think data is knowledge in general, and the reliability and accessibility of that data is the key. Now, with every broker, I think the first thing to understand is which data is needed to be analyzed, and a good starting point would always be the P&L and understanding where the profits are crystallizing and why they're crystallizing that specific place. Maybe they're not taking advantage of the, A-book liquidity. So understanding, analyzing, and having access to this data is the key. Yeah, I agree.
And sometimes for brokers, they actually they view data in different departments. And so they don't really have a consolidated view of data that's kind of essential to success of a brokerage. And so the marketing department would be looking at one aspect of data, risk management another, but essentially sharing data, it becomes very critical to brokers' success. And brokers traditionally don't know how to share data properly. And so as a technology providers, we kind of went from a concept of let's give them a data warehouse kind of concept. Here's all your data, do with it what you want. But what we find out that most of the brokers really don't know what to do with it. They have all this data available, and if properly presented or analyzed, could be a tremendous asset. But for most brokers, in spite of the fact that they do have the data, they really don't take advantage of that asset to the full capacity. And so there is a lot of room for brokers to improve in data utilization.
There's a real time value of data as well. I think in the past people would tend to process it in Excel a few days later, but it's too late by then. They definitely need something real time where they're seeing it, within a few seconds of what's going on, and they can act on it before it's too late.
Yeah,
a lot of data, just one more comment, a lot of data requirements right now come from regulatory authorities. And so, it's almost driven from the outside of the brokerages rather than inside. You have regulatory requirements, you have privacy requirements, and so that kind of forces brokers to look at the data in a certain way, but they don't necessarily do it for their own benefit.
And collecting data is expensive, and there's no point collecting data if you don't actually have anything to do with it. So, some examples of ways you can use data. There's obvious ones such as transaction cost analysis. If you're a broker with multiple liquidity providers, you want to analyze reject ratios, fills, latency, and compare that to the cost of trading with that particular liquidity provider. We've been working with some other brokers that that are multi-asset brokers that have lots of different platforms, and they want to be able to use their data to cross-sell to their existing clients. So bringing that data all into one place from lots of different platforms, having an engine that can analyze those patterns, and then kind of Amazon-like curating specific content for their clients and delivering that content over email, banners inside the apps, through the chatbot. This seems like a real good use of using that data. We've also spoken to some brokers about how they can utilize real-time brokers. So analyzing the markets, their clients' positions, their positions, pending orders, and making real-time changes to trading configs for spreads, for routing to different LPs, for A-book, B-book functionality. So I see those as some really useful ways of actually using the data, but just collecting it for the sake of it's very expensive.
No, look, I think this is correct. We're talking about real-time changes. Look, when it comes to risk management, of course, the data has to be in real time, and you have to have the functionality on your platform to be able to make those changes instantly with no server restarts. Another type of data from a technology point of view is to analyze, and touching on what you said, Tom, to do with the liquidity providers. So, today most of the key liquidity providers, offer good services, but the point is there are different LPs that are stronger at different times. So part of the service we offer is some real detailed data analytics into the tick data of the liquidity providers. So from the platform itself, the brokers can actually analyze what LPs are good to use at what time, and to ensure that, they're getting the right price and using the right mix of LPs for the right type of clients at the right sort of time.
Yeah, sounds like there's a lot of different solutions to address different problems, whether it's a TCA, data-driven solutions, right? But I want to touch upon the point that Ilya made about brokers not really knowing how to utilize data, and it's kind of in different compartments, in different departments. It's a different sets of data. Is there a priority for brokers and technology providers to utilize this better? Create kind of like holistic picture of business analytics.
I think data analytics and risk management, be it real-time or historic data, right? It's a must nowadays. It used to be a good selling point, but now every technology provider has it. The question is how they utilize it. Is there access to different roles now? Can they really create both managerial, regulatory, and risk management report? Can the dealing desk use these reports? Are they really usable? Are they user-friendly? Is it easily accessible? So I think the question now is more usability, because all of us are collecting data. It's how you present the data.
I think also it has to be presented to a specific individual who is looking for something. So because a lot of times we, as a technology provider, would give brokers canned reports, right? So they can only view data in a way that we give them access to data. And so if they want to do something different, it becomes a costly proposition, when they have to write new reports or go to their IT department. So the challenge is really, how do you make data more intuitive? How do you present it in such a way that if I have an idea and I want to see what data I have for that idea, that I can do that, because today for most brokers it's not not doable. So they basically stuck with what's there. So as a technology provider, we have to create flexibility
of data structures and access.
So it sounds like everyone agrees that there's a lot of data, there's a lot of data collection. However, the utilization of this data and presenting it to the users could be better, could be optimized. Yes,
so it all depends on the goal that you set up as a company, for which department and what is the purpose. That's going to the previous question, that brokers are a bit behind because they have this data product, they can show it in all these nice graphs, but they have no idea what to do with that because they didn't give us a thought. As a technology provider, we can collect that, but we can't really put the logical thinking into and we can't take decisions for the brokerage companies, and we shouldn't really advise them what to do as well. So we can offer, the most that we can do is just like offer presets of, this is how you can use it, for example. This is another example, but actual decision, actual thinking should start with a goal. And the goal is tend to be more on the quality of understanding both liquidity and the behavior of the traders as well. And the historical data is important as well because we're all learning from the history, and it's important to see the trends, because collecting the trends, what's been happening for the last 2, 3, 4 months, 6 months, is actually can help you to make a decision about the future.
I think we can add a lot, actually, because we see so many hundreds and hundreds of brokerages and how they operate. And so we have a view that a single broker doesn't have, because they have their one view that they sit in. So we've got such a big holistic view of the world. I think we provide pre-populated screens that you can then customize so that you can get going straight away with, when you turn it on, it's already working. And I think we have quite a lot to add, because our industry is we're very forward-thinking in real-time type stuff like that in our industry, much more, I think, than in the sort of the banking sectors above us.
I think I agree. We can't advise, but we can definitely educate and push the innovation forwards, and we can help navigate the data that needs to be analyzed, how it needs to be analyzed, and how it can benefit the business.
Yeah, absolutely. And on the subject of data, it dovetails nicely into the next question. So I guess it depends on the size of the company, right? And whether or not they should pay attention and should mine their data, right? I mean, if it's a smaller company, I guess it's less of a priority. But when you grow, your needs change. So let's talk about how do those technology needs change as the company, as the brokerage company grows their business, grows their book. What are the specific tools that or technology that the company should be looking for when they kind of move to that next step of their evolution of their business?
Well, I think for startups, the budget becomes the main concern, right? So as a startup, you can't really afford a lot of things, and even for external data, some of the external data is quite expensive. So as a startup, you're not only limited with the budget and what you can afford, but also you actually, the owner of the business or the management of the business wears many hats. So as the business grows, it becomes more niche, more specialized, and then the data kind of gets split to accommodate specific niches. And for a smaller business, you kind of have to look at the holistic picture and try to make sense of it all. And unfortunately, for a lot of startups, they really don't know business well enough. So for them, it's a kind of a learning experience, and a lot of times it's quite painful.
I remember when we signed up our first broker years ago, we gave them all the technology, and they called me up and they said, I've got a few questions. Like, how do I make money?
Right.
What do you mean?
That's a good question.
That's a very valid question, yeah.
How does the FX industry work? It's like, right, I would have thought you might have thought about that before you started your business.
Right.
But yeah, it's I think it's starting with a platform. And when I started at ODL Securities all those hundreds of years ago, they used to run risk on a piece of paper. So they would literally write it down, and then that very quickly turned into an impossible situation because there was too much data. So it turned into spreadsheets, it turned into systems, and then grew into what the sort of technology that we offer today.
I think the brokers are also taking a different pathway nowadays. Like 15 years ago, it would be an offshore broker with a B-book, and then they would grow into a more of a maybe regulated broker, start looking at A-book to send some flow there. Then they would start aggregating and and realizing that A-book profitability can be very close to B-book profitability. Then eventually they would start offering their liquidity as a maker. Now, nowadays we see, and they would just need a bridge at some point, right? So now, whenever we see a new broker emerging, they have a much better understanding of the industry, and they want to aggregate straight away. They need access to liquidity, good quality liquidity. They need reporting, they need risk management, and big or small, they straight away want to be a maker. Now, and that demand is growing, and the demand for good technology that is able to offer this as a package is a must nowadays, and it's not just a bridge anymore.
What you're saying, the industry has learned, and the new guys are leapfrogging into the you know the what used to be the 10th step of
Yes, unfortunately the hard way, but finally, yeah, we're at the point.
Happening.
But it's,
yeah,
I think it's really important as technology providers. It's our job to offer scalability to our solutions, so we can accommodate the needs of from a startup broker to a more established broker, because the needs are different, and also bearing in mind different sizes of brokers. So, for example, with brokers that have smaller dealing desks, to be able to offer some sort of automation when it comes to changing profiles and things like this. So it's our job to provide technology that can actually grow with a broker, but also satisfies the needs of a more advanced, more established broker and this kind of thing. So it's our job to design it and make it workable.
Yeah, definitely. As a startup, as Ilya said, it's very difficult to look ahead where you might be in 2, 3, 4, 5 years' time. You don't know what's coming. We've already discussed that there's lots of changes in the market over the past 2 years. Everyone moving to crypto. So if you can't do that, you obviously, as a startup, you want to start making money as quick as possible. But knowing things like, do I want to be able to offer white labels in the future? Looking at adding new asset classes, it's relatively easy to add crypto CFDs to an FX CFD platform. There are differences on, financing. More regular financing is required, but very difficult to add crypto spot into an FX platform because it's multi-currency accounts and things like this. Also, I've seen large retail brokers that have become very successful, very large business, very large infrastructure, and they want to move into B2B space. They want to be able to offer fixed connections to their clients, have an institutional UI, and with a real retail-focused platform, it's very difficult to add that in. They'd have to have a separate platform running with a separate team of people kind of looking at that, so it can become very expensive.
Also, as a technology provider, when we deal with startup brokerages, and we have a totally different role than when we deal with an established broker. And a lot of times with startup brokers, we almost become an educators, because startup brokers ask, why do you have this feature? Why do you have that feature? How do I do this, or how do I do that? And so we find ourselves spending, tremendous amount of time educating startup brokers how to do their business, versus when you have an established brokerage, then it becomes a question of what functionality you have, how fast can you scale, what options you have. So it's a totally different role, and the way you deal with different size brokerages, totally depends on what they know, what they want, and how you want to help them.
I've also seen that with the larger brokers that are more established, they're looking to differentiate themselves, so adding in their own functionality, their own features. And with that, we're seeing a lot more of the larger brokers now that are looking for new platforms that are looking to own the IP. Like it seems to be, requirements coming from investors that it's really important for them to own the IP. So having a platform that can take you from, a startup, maybe with SaaS, through to enterprise, where you can start, making it your own, all the way through to owning it and bringing it internally, so your own teams can actually work on the code.
I think definitely in our case, with flexible architecture we have, it's not difficult to add new asset classes, and I think the most popular platforms, ActTrader, MetaTrader 5, are definitely capable of adding those new asset classes, such as spot crypto, for example. So I actually think that now the industry is heading towards a very, very flexible architecture in both back ends and front ends.
I think for brokers, it's a challenge with the emergence of MT4 and MT5. I mean, when we started 20 years ago, the brokers were used to try to differentiate themselves on technology. And then all of a sudden, everybody was offering the same exactly platform. So everybody started to squeeze their spreads and try to offer business conditions that would attract customers. But essentially, technology, from being a differentiator for a broker, became kind of a commodity. And so, for us, it's also changed our role, because we try, technology became a kind of a tool set for a broker to make him more efficient, more profitable, rather than a differentiator, because they stopped using technology as a differentiator for a customer.
This is a good point. I mean, if everybody's offering the same platform, how do brokers stand out from each other? But one thing to look at that we do to help from a technology point of view is, for example, offering the synthetics. So if the broker then can offer exotic symbols, or for example, a basket of cryptos, or different ways to actually present the different asset classes, which you can do on our types of platforms, as tech providers, we can help clients differentiate by offering these kind of tools. And of course, by keeping them efficient and profitable, that's great, and offering the broker the data they need to be profitable. But that's one real way the synthetics have been able to let them stand out from the crowd.
But talking about the size, I think all that mentioned is the organic growth that they make none of the less, because they increase their knowledge, they know more, they want to try new things, and of course explore more functionalities, because most of us doing the bridges and platforms, and at the start they're using 3 functions of that, and then slowly start to, and what is this, what is that? But with the growth, what I see, which even some big companies, they neglect to understand how much of manual work they actually do. And this is, if to give an advice to the audience, this is where you should pay attention at the early start as soon as possible, because I know some simple things they do, your team's doing for hours, when it's possible to do that by one click button, and most likely it is somewhere in the platform or technology that you're using, or some small tool can fix that. So this automation is one of the things that you should start implement quickly.
There's also some other interesting asset classes. I mean, we announced in Cyprus about the All Stars Trader product that we were providing all the technology for, and it's streaming liquidity into our marketplace, into our brokers, where you can basically trade against, it's like football index, but a market made. So you can trade against footballers and celebrities. Completely different asset class, completely different model, but very interesting. And the fact that we've all built such flexible technology in our companies allows us to be able to turn these sort of things on and allow our brokers to do more things. In fact, even we've had a new client recently, and we've got a few others, very similar model, where they're like a mini fund. So they've realized that they can access this technology to set up everything they need in a fund really cheaply that they could never do before. And instead of working in a bank and the bank making all the money, they can make the money themselves and offer this out because the technology is now available.
All right, great discussion about the evolution of technology needs. Obviously, as the company grows, you need the risk management. Your needs for scale change. You need additional tool. You need additional asset classes. So let's talk about the interesting stuff, which is the cost of all of it. 10, 15 years ago, there were a few bridge providers. Now there's probably more than 15. So I know John will not agree with me, but there's a corollary of the Moore's law. The cost of technology should be going down over time because it becomes a staple in FX as well. What are the trends in terms of costs? I mean, is the cost of technology? I mean, generally, from what I sit and I see, it's getting cheaper, but not in all cases. Are there like an iPhone of the industry? Why is it not getting cheaper? What do you see?
Yeah, so the cost of actual hardware may be going down or becoming more performant for what you can pay for, but the overall cost to provide technology, I would say it's not. Over the past few years, the demand for good developers has gone through the roof. It's very hard to find these people, and with that, the cost of them has gone up. We've got nearly 700 engineers, and we're continuing to grow, and we're having to look at some really imaginative places to open new offices to get talent pools that haven't been tapped by everyone else, and obviously that comes with a cost. Also, maybe 5-10 years ago, brokers are putting all of their kit on physical hardware. That's all now moved to the cloud. At the beginning, it looks like it's a bit cheaper, but when you start adding all of the functionality that you get with the cloud, like there's lots of stuff to help with disaster recovery, higher availability. It adds up, and it probably isn't cheaper, but you probably have a better service than.
You get a lot more for your money, though, don't you? Now, so your pound you pay now buys you 10 times as much as it used to. I think that's where the Moore's law thing comes in. Is you get so much more. We can't. We have to run businesses, and we have our costs have gone up as well a lot. It's just like you, but because of paying developers, etc. But we can put more and more in. As we build more, we make it available to more people.
Yeah, look, I think it's fair to say that costs are probably more stabilized, because if we look at a tech provider 10 years ago, all that was really being offered was just connectivity. So you're quite right, Tom. It's what you get from a technology provider now is so much more sophisticated. So I think in actual fact, you're getting, it's probably stabilized costs, but you're getting much, much more from your money now from a tech provider. And the technology itself is, is much more advanced.
I think the only technology that gets cheaper is obsolete technology, the technology no one wants to use anymore. If it's just a bridge that connects you from point A to point B, that technology will be cheap. Now, the companies that innovate, that invest in research and development, they're also able to justify the market standard cost for their technology, because the dollar per million they are earning or helping the brokers to earn can easily justify the cost of the platform. And it's not just a bridge anymore, as we just discussed, the demand of the brokers. Now it has to be a wholesome solution to cover every side of the business, and not just the dealing desk, not just the reporting desk, not just the managerial reporting and risk management, but every single part of the business has to be covered by our technology today.
And it's important, I think, for tech providers to demonstrate to the brokers using their technology how they are actually enabling them to make more money. So on our platform, for example, we have a feature that allows them to understand, by using certain tools and features that are unique on our technology, how much revenue that's generated for them. So then they can always cross-check that back on what they're paying. And at the end of the day, if there's added value there, it's not really what is the end cost that's being paid. It's what am I actually making from that, and in comparison to the end cost. So I think it's important for us as tech providers to make that clear to our clients that that's the added value. This is what it costs, and this is what you've made. And that way I think it's transparent and it's clear.
Exactly.
What the advantage.
I think that in the beginning, 20 years ago, basically retail FX was extremely profitable, much more than it is now for brokers. And so as the profits went down,
don't cry for them now. I think they're still doing right.
They're still profitable, but technology became a commodity, and so now a lot of brokers or companies, especially startups, they're trying to minimize their cost at trying to find the cheapest technological solution. And it's kind of a catch-22, because essentially to stay on top of the technology, you have to invest quite a bit of resources to innovate, to find for new solutions. And so when you're being squeezed as a technology provider, you kind of start to have shortcomings in terms of what you can provide for the brokers. So I think there is a kind of a balance. I think finding the cheapest technology in the market is not necessarily the best option for most of the brokers. You really should look for the technology that accommodates your needs, and the cost is actually corresponds to what you need, and I think that sometimes is overlooked. And a very good example of that is probably MetaTrader, white label, right? You buy it for almost nothing, and then, if all of a sudden you find out that you have to get all these plugins and add-ons and everything else, and all of a sudden your cost is so much higher. So I think a lot of the, startup brokers, they really don't know out of the gate, all the components of the technology that they need, and they try to, squeeze the technology providers, and that's kind of has adverse reaction, to their business.
One thing that I've seen a lot recently, certainly in the crypto space, for crypto exchanges, so we offer a crypto exchange, but our crypto exchange is built on financial grade technology that's used across the market. But there are a lot of crypto exchange startups that are started from someone's basement, and these guys are offering really really cheap software, and then when we have clients that have been talking to these guys and then coming to us, there's obviously a massive delta there. So I think this is an interesting conversation that we have to have with a lot of clients, explaining the differences between an established provider and some of these new people that have kind of just built, like some of the original Bitcoin exchanges that they were built upon fantasy playing card exchanges. Mt. Gox was originally for transferring playing cards, and it was adapted, and that had so many issues, downtime, hacks, and things like that. So explaining the differences on those costs is a conversation we have to have quite often.
Yeah, we're all of us here are in the quality game, and it is important for us to turn away clients that are looking for not quality, but cheap.
I was going to say that you guys obviously are trying to make a point that the good technology can command a higher premium, but you can still get lower cost solutions, but they're are, you get what you pay for, right?
Yeah, it's cost against benefit again, isn't it? It's coming back to what I said before. If you've got good technology, it should be clear to present that to the client what the added value is. So at the end of the day, it's not. We shouldn't get too focused on what is the fixed cost. It's what's the cost versus the benefit. And if the benefit is there and it's clear, and if you've got good technology, you can easily present that. Then it makes business sense to go ahead and do that. So.
Absolutely. Albina, do you want to add to that?
Yeah, it is. Well, technology is an essential part of the brokerage company. So we doing technology ourselves, we know what are the essential parts of it, and we're investing money in it. So we're not trying to cut our costs on the parts that's actually driving the business. So you need to choose the partners that can be your reliable partners all the time, and that unfortunately costs more if you really rely on it. But I think it is necessary because it's just essential.
Okay, and the last question for dessert. We only have 5 minutes left. So many providers follow in the footsteps of institutional FX platforms that used to be the big players, like 10 years ago. And they're trying to build captive ecosystem where they control the maker, they control the taker, and they control everything that happens in between. So it's a bit of a controversial topic. And recently in the news, the Curnex lawsuit, I think, dates back to 2005, where Curnex was given preference to certain providers. And I know a lot of firms, technology firms in our industry, in the CFD technology industry, are trying to kind of accomplish the same, which is, to control the ecosystem. What do you think about that?
Well, especially with Curnex lawsuit, right? We're talking about an unfair execution venue where the top of the book was manipulated. Now, whenever we look at more common examples in our industry, that would be makers who price into the system being charged premium if they do not take the technology. Now, can we name this a real ecosystem with beneficial terms for all the participants? Because truly, an ecosystem must help all the businesses that are participating in it grow without entry barriers. So clients or makers, takers must be free to enter or leave the ecosystem at their own will. Now, there is a very good example of an ecosystem in our industry, actually, and that's MetaQuote Software Corporation. Now, what they've done in that field is absolutely incredible. They have brokers that are benefiting from the ecosystem. They have their traders. They have their plugin developers, technological companies, expert advisors, and all of these companies are benefiting from participating in the ecosystem. Now, this is something we do in UBS as well. So we do not set artificial barriers of entering. Any LP who wants to come with their own technology and stream into the system are free to do that, because we think it's very, very dangerous waters to tread on when you force someone to pay extra just to participate in the ecosystem, and our LPs choose us because of the benefit that we've just discussed of using the system, and not because we forced someone to buy it.
Very interesting. Anyone else wants to?
I think that flexibility of allowing anyone to plug in anything is the key thing. So you become the glue, really, in the middle. You let anything connect to anything. And whilst you provide a lot of components, so someone who wants to use a lot of different parts, and we all do this, they can. But when there's something else that they want to add in, they can. It's not restricted. It's all open APIs. It's all capable of doing it. I think that's really important.
Yeah, these closed ecosystems, they obviously have some advantages. Time to market, very quick to get set up. There's lots of familiarity, so end clients know what they're getting. They know exactly what you're offering. But yeah, for me, the biggest disadvantage is just being locked in. If you want a new LP and the LP isn't able to join, the ecosystem doesn't want them, or generally they have to pay to play. Maybe they don't want to pay to play. It's difficult to get them in, so you're kind of starting to limit yourself. And once you are locked in, it's hard to move.
I think the worst part of it is that the cost is ultimately transferred to the taker, and they are the victims of those captive ecosystems. Now, is this a sustainable business model? I think in the long run, the market will punish such behavior.
I think today any technology provider in our space looks a little bit like a porcupine with all the APIs connecting to everything out there. So essentially, you can just connect anything to anything in today's
so naturally,
world.
this ecosystem just naturally, organically
Right.
occurs. You don't
Right.
have to create the closed loop system. It sounds like that.
Right. However, there is an element of VIP mentality, right, which always exists. Whenever we qualify our potential customer, we always try to evaluate how big are they going to be, how much volume we're going to get, and obviously you try to make it more convenient for somebody to onboard a more lucrative customer, right? So I think it's a natural way to provide certain benefits to certain type of customers who benefit you more. So it's but I don't think it's actually locks them into your ecosystem. They can leave at any point they want. They only stay if they benefit from what you're providing.
But the reporting is connected to the bridging system as well, so the regulators actually stepping into that. And now when you're providing the report that have to show all the outline of the exactly pricing that happened, so I think it will be eliminated within a time by itself, just because you just have to prove all that in paper, in actual
I guess regulators are just a bit more reactive.
Sure.
It takes them time to catch those type of behaviors. All right, guys, we ran out of time. Thank you so much. Such a productive discussion. Thank you so much, everyone. And thanks
Thank you
so
very
much.
much.
Thank you,
Thanks for
Natallia.
coming.
Thank you.